on Bloomberg Quint.
Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines this morning. The Monetary Policy Committee of the Reserve Bank of India will announce its policy decision today. 27 out of the 36 economists that have been polled by Bloomberg expect the MPC to cut rates by 25 basis points. Divan Housing Finance has delayed payments of interest on some of its NCDs issued to mutual funds, bringing the lender's liquidity worries back to the fore. India will continue to be the fastest growing economy in FY20. According to the World Bank, it expects the country to grow at 7.5% over the next 3 years, and that is faster than China. Crude oil prices continued to fall after US petroleum inventories surged. WTI entered a bear market while Brent briefly fell below the $60 per barrel mark. And India's services sector purchasing managers index grew at its slowest pace in a year in May, falling to levels just short of a contraction. Let's start with the action on Wall Street. US markets gained for a second day in a row on Wednesday as hopes of the Federal Reserve cutting interest rates in July rose to 70%. Fed Chair Jerome Powell also said that the Fed will do what it must to sustain the expansion. Renita Young of Bloomberg News tells you what happened in that Wall Street session in this report.
U.S. stocks closed higher on Wednesday on more optimism that Mexican tariffs can be avoided. However, traders are still digesting mixed data from the world's largest economy that came in the form of weak private jobs data that helped to bolster bets that the Fed would cut rates pretty soon. However, that actually offset a report showing that service industries gauge that actually beat analyst estimates. So positive news there. And we also saw treasuries begin to rise a little bit more. But Brent crude oil sunk to below $60 a barrel for the first time since January. This happened a week after we saw inventory swell to a pretty large degree. Meanwhile, the FANG stocks are still buckling under regulatory and antitrust probe pressure. And we saw a couple more earnings come out today with Campbell Soup, Salesforce, and American Eagle Outfitters all posting better than expected earnings. But Beyond Meat will post its very first earnings on Thursday. This is the first time the company's had a chance to do that since its IPO in May. And that's a look at your Wednesday Wall Street action. In New York, I'm Renita Young for Bloomberg News.
All right, let's also take a look at how the Asian markets are faring this morning. Rosalind Shin is joining us live from the Bloomberg studios in Hong Kong. Morning, Rosalind. Any positivity carrying over to the Asian markets this morning?
Well, you know, if you talked to me yesterday, I know you guys were on holiday, there was a lot of positivity, but not quite so much today, where the markets are looking mixed. The MSCI Asia Pacific actually is losing very slightly, down by about 1/5% right now. You know, really a lot of uncertainty because of this, the discussions with Mexico about tariffs, and those talks, of course, remaining unresolved when there was no agreement at the end of those talks. So we are not a little bit of looking for direction, I would say, going on in the markets right now, because we do have the Nikkei making gains of about 0.14%. The topics, though, pointing the other direction is dipping into negative territory. Now, we've looking at China and Hong Kong. The Hang Seng, not a lot of change, really, but it's dipping into the red, down by 0.05%. Right now, the Shanghai Composite losing 0.28%, and the CSI down by less than 1/5%. Now, we did have HSBC downgrading some of the airlines which are listed in Hong Kong, including Cathay Pacific and also China Eastern, and that is on the lowering the estimates earnings for the sector as a whole, largely on the back of those US-China trade tensions, especially for air cargo. So this is the key factor for this sector going forward. So we've got Cathay Pacific right now losing 0.7%, and China Eastern, listed in Hong Kong, also losing 0.7% as well. Over in Australia, the ASX 200 is making gains of 0.6%, led by financials like Commonwealth Bank of Australia. We did see, of course, RBA rate cut earlier this week. and some data coming out of Australia yesterday showing there's a little bit of a contraction in its economy. And we're looking ahead really to Friday because, of course, we've got the US jobs report, which will be absolutely key to whatever the Fed is going to decide next. And we've also got movements elsewhere in the world with Theresa May stepping down as a Prime Minister, and the G20 finance ministers meeting, which is going to be happening over the weekend in Japan. All these factors, of course, are going to be things that the investors will be looking at as they move forward for the rest of this month. Back to you.
Thanks so much for that, Rosalind. Well, the US and Mexico have failed to agree on a deal with regard to tariffs, with duties on all of the imports from Mexico set to be imposed on Monday. The two sides had come to the negotiating table after tensions on the southern border reached its highest last month. Derek Wallbank of Bloomberg News tells you the latest in this report.
There certainly was. There's been progress made, according to the Mexican side, and also President Donald Trump, who announced that on Twitter. However, Trump said that there hasn't been nearly enough. Trade talks are going to continue tomorrow in Washington, the president said, but it's very clear that the U.S. side is looking for more from Mexico before they make some sort of deal to avert the 5% tariffs that would go into effect next week. Now, there is some resistance to this move from within the Republican Party. Senate Republicans, led by Mitch McConnell, have told the president that he ought to come to the Senate and try and sell a very, very, very group of skeptical Senate Republicans on his plans before actually taking those tariffs into and levying them. But there's no indication yet that there is going to be any sort of delay in this. Right now, all indications from the U.S. side are full steam ahead for 5% imposition, and then possible upscaling beyond that going forward. So don't read into any possible pullback just yet.
All right, while bets for the Fed to cut interest rates in July are rising, officials of the FOMC are not convinced yet, apparently. At a two-day conference in Chicago, Fed officials stressed the need to see more data before committing to any interest rate move in either direction. Focus also is on the jobs data that is scheduled to come in on Friday. Kathleen Hayes of Bloomberg News tells you the latest in this report.
They're waiting to see further damage from this intensifying trade war, certainly over the last month, since May 5th, when Donald Trump tweeted out that he was going to raise tariffs on China, put on new tariffs. China retaliated. The world has shifted from maybe the Fed cuts, maybe not, to the bond market, economists expecting them to move, but they've got to see it in the data. Jay Powell, of course, kicked off events at this two-day conference in Chicago, the Fed's Monetary Policy Review Framework, arguably one of the two most important conferences the Fed holds this year. And he made it pretty clear, too, waiting to see if this trade war and how it's intensified will damage the economy's solid fundamentals. The Fed still thinks that's what's in place. Now, very importantly, we got the Fed's Beige Book earlier today. It's their anecdotal survey of the 12 district banks. It gets the Fed officials, all of them, on the same page when it comes to their policy meeting on the 19th and the 20th of this month. How does the economy look in detail across the country? The synopsis is the economy's improving. It's growing at a modest pace. So now, all the more focus on Friday's U.S. jobs report to see if it holds up what the Beige Book is pointing to. And in that vein, we have to look. The ADP's private jobs tally comes out 2 days ahead of the government's report, and it came in on the light side big time. Jump into the Bloomberg Library with me, because the ADP tally of private payrolls was up just 27,000 in May. It was up some 275,000 in April. Now, you can tell from this chart, there's no one-to-one correlation. It's pretty volatile. Nevertheless, the trend seems to usually go kind of in the same direction. At the right-hand side of your screen, when you see that big move from 275K to 27K, you say, wow, what happened? A fluke? Or is it something about trade war uncertainty really causing businesses to sit back and say, I'm not going to hire anybody right now? We'll see when we get the Friday jobs report. But also today, on the other side of the coin, if I'm the Fed, I'm saying this is why I'm going to wait and see. If you look at the ISM's non-manufacturing, their services activity gauge, it hit its highest level in 2 years on, guess what? Rising employment. A lot of mixed signals out there. That's why the Fed's saying, look, we're listening. We know what's going on, but we have to really see it in data before we commit to a move.
All right, moving on to crude, where rising U.S. inventories have dragged the U.S. benchmark into a bear market. Vandana Hari of Vanda Insights believes that it is difficult to predict a bottom for crude as long as the U.S.-China trade tensions and weak macro data prints continue. Listen in to a conversation that she had with Bloomberg Television earlier today.
Clearly, the pressure is more on WTI, the U.S. benchmark, rather than Brent. Though, of course, both the crude benchmarks and crude in general is under a great deal of pressure. Where is the bottom? As long as we see U.S. and China continuing to give each other an eye for an eye, as long as we continue to get poor, weak macroeconomic data from around the world, as we have been in recent weeks, I really don't see anything coming in to put a bottom under the crude. You may ask, what about OPEC? I think even OPEC in the current circumstances is a little bit, it's going to be helpless because nobody knows how much demand is going to be affected this year, but it's really fear that's driving it down right now.
Yeah, that's an interesting point you make, because so much of the discussion we've had around the oil price this year has really been around the supply side. But is this becoming a demand story as well in the environment of the trade war?
Absolutely. Look, we have seen the likes of International Energy Agency, OPEC, the US EIA successively revising down their growth estimates, global oil demand growth estimates for 2019 and some cases 2020 as well. But trying to estimate global oil demand growth is always a tricky business, far more difficult, I would say, than trying to estimate supply, because supply you can still add up based on how much OPEC is planning to pump, how much we expect the U.S. production to increase, and so on. But demand is really tricky. At the moment, the reason I say it's hard to pick a bottom for crude is it's really fear, something that akin to what we saw in November and December last year. There's a lot of risk aversion in the market. And oil is a prime risk asset. So just as you have a flee of investors fleeing from risk assets, you will continue to see oil under pressure as well.
Now let's see what's making headlines across the globe. Sue Keenan of Bloomberg News tells you the first word headlines.
The U.S., which is preparing a potential $2 billion arms deal with Taiwan. The package would include the first-time sale of the U.S. Army's best tank and a resupply of anti-air and anti-armor weapons. The Pentagon has notified Congress of the deal, which is expected to be approved within a month. The move is likely to bring protests from China, which sees Taiwan as an integral part of its territory. On to the economic data from the Fed. Its latest Beige Book survey says the U.S. economy generally expanded in recent weeks, and the business outlook remains, quote, solidly positive. The report says activity grew at a modest pace from April to mid-May and improved from a slight to moderate pace seen in the previous period. However, it indicates some problems, including weak retail sales, factory orders, and home purchases. On to the European Union now, which has taken the first step towards disciplining Italy for its failure to rein in debt, paving the way for an initial penalty of about $4 billion. The EU Commission says the populist government in Rome has not made sufficient progress in reducing its obligations in line with the bloc's fiscal rules, and that the disciplinary process is warranted. The FTSE MIB index, the FTSE MIB index, I should say, fell on the news.
having examined all relevant factors, we have concluded that the debt criterion is currently not respected and that a debt-based excessive deficit procedure is warranted for Italy.
Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right, Agam Vakil is here to tell you all about the day's trade and what's happening in the futures and options space. Agam, if anything, it's going to be a difficult day to predict right at the start. It could change dramatically based on what the RBI Monetary Policy Committee decides to do.
Sure.
But what are we looking at?
Sure, Alex, the consensus are looking at a cut, and that's how we've seen markets fare so far, and which is why you're seeing markets hold on to those crucial levels. As far as the Nifty is concerned, about 12,000. The SGX Nifty, even though it's indicating a little bit of a pause for now, you know, it's been typical. And what has been typical is that while we see very subdued movements in the first half of the session, we eventually start seeing a very sharp rise in the latter half for some reason or the other on the gaining or the losing end. We did see 0.5% cuts last Tuesday for Indian markets, mid-cap and small-cap indices as well, largely marginal movements. So, coming on to the Bank Nifty, well, again, marginal losses, but the PSU banking index did advance by around 0.25%. Now, coming down to ADRs, we did see some weakness in Tata Motors and Infosys, and among other ADRs, we also had, well, perhaps some amount of gains for HDFC Bank, but very quiet moves. Moving on to your, FI flows, and again, not too much to speak for here. Well, about 400 odd crores being sold as far as FIs go on a net basis. Let's move on and talk about your contributors, and it was essentially TCS, Infosys, Reliance Industries, which are bearing down on the indices. And moving on, as far as your futures and options space goes, we are keeping an eye on its futures, where we did see some unwinding coming through, and it was long unwinding for the Nifty futures. The Bank Nifty futures actually saw, well, an addition in open interest towards perhaps to a certain extent fresh longs. Coming down to your open interest across options, it was the 11,900 put along with 12,000 put, which had a substantial amount of open interest, and the 12,200 for now is likely to remain a resistance. In terms of changes in open interest, 11,800 put, which did see a substantial amount of OI writing. Coming down to your India volatility index, that declined by 2%. This is a positive for those who are long in the markets. Less uncertainty indicated by the WIX, and the Nifty put call ratio also, well, didn't change as much, but did come off by as much as 1 or 2, around 1.5. IDBI Bank is new in the FR band, so watch out for that. Besides that, we are also keeping an eye on Mindtree, Manappuram Finance, and PC Jeweler, substantial increase in open interest. And in terms of unwinding, CESC, Berger Paints, and Apollo Hospitals, among some others, which are moving in trade. But Alex, I'm sure it will be the interest rate sensitives which will be in focus in today's day of trade.
All right, and in fact, thanks so much for that, Agam. In fact, we're speaking about the Monetary Policy Committee's decision. The Reserve Bank of India's Monetary Policy Committee will be announcing its rate decision today, while the consensus opinion is that there will be a third straight rate cut in 2019. The question is how much? Will it be a 25 basis points cut as most people think, or will it be a more pronounced 50 basis points? Or, and there's a third option here, will the RBI take an out-of-the-box stance and cut rates between 25 and 50 basis points? Ira Duggal has the answers.
India's Monetary Policy Committee is expected to deliver a third consecutive interest rate cut when it announces its decision on Thursday. Before we go into the economic backdrop, here's what a Bloomberg poll is suggesting. A poll of 36 economists suggests that 27 expect a 25 basis point cut. That would take the repo rate down to 5.75%. 7 economists are saying that the MPC may actually keep a status quo on rates this time around. 1 is expecting a 35 basis point cut. In case you're wondering where that 35 basis came from, the RBI governor in a speech a few months back has said that we can do out-of-the-box thinking on monetary policy, and one of the things he suggested was, why do we have to stick to 25 or 50 basis points? Why can't we do, for instance, 35 basis points? Well, at least one economist is convinced that that's an option right now. One economist is predicting a steeper than expected 50 basis point cut. Obviously, top of mind will be the growth scenario in India. We've been talking about it for months, and in particular, since last week, we got a weak GDP print of 5.8% for the fourth quarter of FY19. But in reality, it's not just that one quarter. Look at the slide we've seen all the way from 8% growth to 5.8% growth. So most certainly the MPC should be debating what's gone wrong on the growth front, how much of it is temporary, how much of it needs to be fixed via easier monetary policy. Two things in particular. The PM Kisan Yojana has put some money into the rural economy, so maybe that could take care of rural demand problems. Plus, some of the investment indicators that came in Q4 GDP could be particularly weak because of pre-election uncertainty. Third point, 50 basis points of monetary policy easing that we have seen. Even that is still to play through the system since monetary policy works with a 2 to 3 quarter lag. So maybe all combined, the MPC, or at least a couple of members on the MPC, could be of the view that more monetary stimulus is not needed at this point in time, but it is quite possible that a majority of the committee thinks that more stimulus is needed. Should that happen, the inflation scenario will be supportive because the inflation dynamics have changed in a way where headline inflation is now actually going up, but core inflation is coming down. So actually for the MPC, this is a slightly more comfortable inflation scenario because they can look at core inflation and be convinced that there is demand side pressure in the economy and act accordingly. The headline number, while rising, is still well within the comfort band. Remember, the MPC works on a target of 4 plus minus 2% of inflation. We are still at 2.92%. So maybe they can see the growth inflation dynamics, choose to become a bit more growth supportive and do another 25 basis point cut, which would take it to 75 basis points of monetary easing. That is significant, folks. Finally, there is liquidity. Now, liquidity has been a problem for many, many months now. As you can see, this is all deficit liquidity. So we have a lot of money market participants complaining and wanting the RBI to ease liquidity. But they'll find it tough to argue this on Thursday because just on Tuesday, you've seen liquidity turn surplus. So now to say that the RBI needs to ease liquidity significantly will be a little bit of tough ask. But still, money market participants want to know that this surplus liquidity will be allowed to persist and the RBI won't suck it out again. That will be important for the bond markets. Bond yields have rallied on a number of factors, global and domestic, but certainly easier liquidity is one part of it, and rate expectations or rate cut expectations is another part of it. So tomorrow, if we get a standalone 25 basis point cut without a change in the stance from neutral to accommodative, or some stance change on the liquidity front, then perhaps the bond markets will react a little bit negatively because they built in perhaps a little bit more than just a 25 basis point cut. But still, they may also choose to look at what the language looks like before they go any further from here on. Of course, global factors remain relevant. The decision comes in on Thursday. Stay tuned to Bloomberg Quint for all the updates, both on the web and on video.
Absolutely. Indeed. Do stay tuned. We'll be covering the monetary policy both pre, during and post. So watch out for all the updates there. Let's bring you another top story. Dewan Housing Finance continues to remain in the news. The company has delayed payment of interest on NCDs issued to mutual funds and other entities on Tuesday. In light of this, CRISIL and ICRA have downgraded the company's commercial paper, citing liquidity concerns. It now stands at D. Vishwanath Nair is joining us on the phone line with all the details. Vishi, what has been downgraded, I understand, is 850 crore worth of commercial papers. There's a lot more that is due. Do you have any idea about the repayment schedule and how this is going to pan out?
So, Alex, what we do know is that the payment that they have delayed on Tuesday need to be repaid within 7 days. That's the 7-day grace period that DHFL has been given as part of the NCD agreement. Apart from that, between April 30 and the end of July, DHFL is supposed to pay about 8,400 crore worth of repayments. This is across various types of bonds. But what rating agencies have been pointing out is that the company's liquidity is not strong enough. Now, DHFL has said that it will raise about 6,000 odd crore through various portfolio sales, but those things are not really materializing as much as the company had expected. So it remains to be seen whether by July they will be able to make good on all of these repayments. And firstly, on what has happened Tuesday evening, whether they're able to make good on that. Because without that, the company's rating goes into default. I mean, already ICRA has rated it D, which is what default stands for. Typically, if this goes into default, then the company will not be able to raise further funds. It becomes that much more difficult for the company to find new investors.
All right, thanks so much for that, Vishy. Of course, Vishy is going to stay on top of this and bring you all the updates as and when they come in. But post the downgrade by the rating agencies, Dewan Housing has put out a statement saying that it is that the downgrade is extremely surprising and that the company is making substantial efforts to ensure it does not default on repayment of its financial obligations. The statement further reads, and I quote, "The actions are unwarranted and the company is seeking clarifications on the rationale that predicts DHFL's ability to service payouts on the due dates. Such speculative rating rationale is not adequate." End of quote. All right, DHFL, certainly one of the stocks that you have to watch out for in trade today. Mishika Parekh is joining in to tell you all about the other stocks in news. Morning, Mishika. What's on your list today?
Good morning, Alice. There's a long list today. Actually, the first one being Bharat Forge and RK Forging. The preliminary North America Class 8 trucks orders fall below 10,800 units versus 35,200 units, which is down by 70% year on year. Then we have Aurobindo Pharma. They received Form 483 with 10 observations from US FDA for its formulation manufacturing facility in Hyderabad. The observations are repetitive and procedural in nature as per Aurobindo Pharma. CARE revises long-term and short-term ratings for Eros International Media to D, which is default on account of delays in default in serving debt availed from banks. That debt was a total of 750 crore rupees, including long-term and short-term bank loans. Omax Autos, Speedomax unit in Haryana receives a closure notice from concerned authorities. M&M production is down 17.5% year-on-year to 43,665 units versus 52,904 units. Then we have VST tillers. The tiller sales are down 19% to 1,411 units versus 1,751 units, while tractor sales are down 25% to 527 units versus 706 units. We also have Tata Motors. JLR and BMW announced collaboration for next generation electrification technology. Lastly, let's have a look at the important bulk deal involving Mahindra Logistics. Kotak funds acquire 30 lakh shares, which is 4% at 490 rupees each. Goldman Sachs acquire 6 lakh shares, which is 0.8% at the same price. And Reliance Capital acquired 4 lakh shares, which is 0.5% again at 490 rupees each. And Normandy Holdings sold 64 lakh shares, which is 9% at 490.2 rupees each.
All right, thanks for that, Mishika. Now, on to updates from the Cricket World Cup. India's World Cup campaign began on a victorious note with a 6-wicket win over South Africa in Southampton. Set a target of 228 by the South Africans, India cruised home with 2.5 overs to spare. Rohit Sharma anchored India's run chase with an unbeaten 100, his 23rd in one-day internationals. He was also the man of the match. Among the bowlers, leg spinner Yuzvendra Chahal picked up 4 wickets, while Bhuvneshwar Kumar and Jasprit Singh Bumrah picked up 2 wickets each. India will now play Australia in their second game on Sunday. In the other league encounter, New Zealand escaped from the jaws of defeat with a 2-wicket win over Bangladesh, which has been punching above its weight. Today's match will see Australia taking on the West Indies at 3 p.m. India time. All right, that's all you need to know going into trade today. Do stay tuned. Like I said, there's a lot of action today. Monetary policy decision is due in just a few hours. This is Bloomberg Quint.